The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Good morning on a beautiful Sunday, 64 degrees. The high today, 75. This is the Accunet Mortgage and Realty Show. I'm Eric Bilstead. But more importantly, we have Brian and David Wickert here, Accunet Mortgage and Accunet Realty Advisors, the owner, Brian, and the Chief Millennial Loan Consultant, David. Hello, gentlemen.
Good morning, Eric. Welcome back to the show.
Thank you, sir.
We're always delighted when you're our co-host, being the news guy that you are. Your insatiable appetite for information.
Yes.
That's what we're all about here.
Yes.
Hey, so we got a lot to talk about today, so let's get right to it. I got an update for you on the Equifax data breach. And, I know you guys have been covering that at WTMJ. And now the count is up to 145 million Americans who have been affected by that data breach.
Mm-hmm.
And so the good news is, we put out that blog post really right after it first happened, and we've gotten a lot of great feedback on that. And I've been updating it. So I want to give a big shout-out to the mother of my best friend from kindergarten, Chuck Auman's mother, Ellen Auman, who I still have to call Mrs. Auman, even though I'm 55 years old. And she sent me a really great email yesterday with some tips that she experienced in signing herself and her husband, Walt, Chuck's dad, up for the credit freeze. Because, just as a reminder to everybody, my conclusion as a guy who's been in mortgage lending for 30 years is that the only way to protect yourself is to freeze your credit at each of the three credit bureaus. And I'm going to ask you, we did not rehearse this. Have you frozen your credit, Eric?
Yes. Right after the news with Equifax, we froze, and it's funny, you know what? It's worth the investment, even if you need to unfreeze or thaw, whatever you call it, because you need to get something out of there or set up another one. It's worth it, I think. Nowadays, it's just we are way too vulnerable these days.
And that was exactly the conclusion I came to. So the issue, though, is for elderly people, let's say, like my mom, who's 87, and her 88-year-old husband. So I was helping them get signed up. And Ellen had the same problem. Oh, wait, I just called her Ellen. Mrs. Auman had the same problem. At Equifax, if you try to use the same email address to sign up a second person, it doesn't work. You get stuck. And so that's a really important tip. You either have to use a separate, second email address to sign up a second person, or you got to do it on the phone. So the other cool thing that Mrs. Auman did for me is she gave me her research on the phone numbers where you'll actually get a live person, the fastest, at each of the three credit bureaus. So I updated our blog post this morning with that information. And then the third thing is that she pointed out that there is a fourth credit bureau. I don't know if you knew that. There's Equifax that committed the sin, TransUnion, Experian, and the fourth credit bureau, which isn't used that much, is called Innovis. So I updated our blog post with the link to go to Innovis, and also their toll-free number. And by the way, Eric, so you can do this for you and Angie, it's really easy to do at Innovis. I just did it this morning, like in a couple of seconds. The only drag is they mail you your PIN number. So you wouldn't be able to unfreeze it until you got that in the mail.
Okay.
But don't worry. No creditor that I know of uses Innovis.
Okay.
Like Accunet doesn't. Everybody uses the big three. And so a big thank you to Mrs. Ellen Auman for giving us those updated bits of information. And again, I can't tell you how many people I still run into, just an everyday conversation, who slap their forehead and say, oh, yeah, that's right, I got to do that. They haven't done it. And the only theory I can come up with, and maybe you've got one, Eric, is nothing bad has happened to them, so they kind of are lulled into complacency.
Yeah.
Why do
you think you're immortal.
Yeah, right, yeah. You don't think that it's going to happen to you. But it could, and then it's a real hassle to clean up the mess. So better to invest the time like you did. And it's not fun. It takes time. But better to invest ahead of time rather than clean up a mess later. All right, after this first break, we're going to come back and talk home sale numbers for September in the 5-county Milwaukee area. They are down pretty significantly. We'll tell you by exactly how much when we come back.
And you can always weigh in if you have a question for Brian, 414-799-1620 on the Accunet Mortgage Talk and Text line. You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
There will be plenty of reaction and analysis after that big Packers-Cowboys game later this afternoon. But what will the head coach think? What will Mike McCarthy have to say the day after the game? You can hear from the coach on Wisconsin's Afternoon News. That'll be at 4:50. Welcome back. Good morning. This is the Accunet Mortgage and Realty Show. I'm Eric Bilstad along with Brian and David Wickert. Gentlemen, Packers, Cowboys, I'm sure you're excited about the game.
Oh, absolutely. What's the official betting point spread? Is it
Oh, geez.
Packers?
Mostly I just have heartburn.
Yeah. I'm always nervous when we go to Dallas. I really am. Hey, who's the host of the oh, no, you're the midday guy now. How's that going?
Scafini and Bilstad is going wonderfully. Yeah. Thank you very much. Yeah.
Okay.
It is going
kind
well.
It's a big deal when you have when you got to do 3 hours of radio every day.
Yes, it's fun though.
It is. It's a great job. It's amazing they even pay you for it. You probably do it for free, but don't let that get around. One other thought on that data breach. The ex-CEO of Equifax was
he had a rough week.
He was raked over the coals by the congressional, was it the banking committee or whatever?
Somebody.
And my prediction is that all three credit bureaus four are going to be required at some time in the near future to provide a freezing and unfreezing capability to consumers for free. Right now they can charge $10 to freeze and unfreeze in Wisconsin. And right now Equifax is doing it for free. And by the way, they've pledged that they're going to have a free for life locking and unlocking facility.
Available when though?
January. Yeah. And then the question on IT projects is January of what year?
Right.
They're claiming 2018. And TransUnion already does it for free, which I think is super cool. Experian is the one that makes you pay $10. But I bet that Congress is going to amend something or pass something to allow consumers to control their data for free. So stand by for that. All right, so September home sale numbers. I read an article, by the way, in the National Association of Realtors. Their chief economist says that 20% of home sales are for sale by owner. Does that surprise you, David?
28%.
No, 20.
20% are for sale by owner.
1 out of 5.
Well, it makes sense to me, if only because you stick a sign in your yard in Wauwatosa, that house is going to go on its own.
Yeah. Okay. So you're buying that. So it's 1/5. So the numbers I'm about to give you are from the Multiple Listing Service from the Greater Milwaukee Association of Realtors, which I'm a card-carrying member of. So we're talking, the numbers I'm about to give you are 80% of the home sales.
Okay.
The number of homes that's single-family detached homes that sold in September in the 5-county metro area was down 8.5%. That's a pretty big number. That's compared to September of 2016. So that means 1,503 single-family homes sold last month, which is 140 fewer than the previous September. The reason, David, is?
Lack of inventory.
Lack of inventory.
That's the 5-county metro
area?
area?
5-county metro area. So
that's
now,
Racine County?
Yeah, that includes Racine.
Okay.
And the good news is, though, that almost the same number of homes were listed in the month of September. 1,923 homes were listed. That means the supply, therefore, increased by about 520 listings. Because you had 1,503 that sold. You listed 1923, so that should be a bump of over 1,000. That's good news for home shoppers. And as a matter of fact, I think we are going to close more purchase transactions in October than we did in September.
Okay.
Which is maybe indicative of this slight improvement in supply and demand. Now, condos, on the other hand, they're doing better than last year. Keep in mind, though, that the condo market is about 1/5 of the single-family detached market. So 14 more condos sold in September this year compared to last. Woohoo! Yeah. But that represents a 4.1% increase because it's based on a smaller number.
Okay.
And year-to-date, condos are up 1.3%. All right, now you ready, Mr. Billstead? I'm going to give you a quiz question. What percentage of condo sales do you think were for cash? 25%, a third, or a half? What do you think, Eric?
I'm going to say 25.
David?
A third.
35%.
Ooh.
So I didn't quite give you the right number, but 35% of condos.
Or just here's a bag of money.
Here's a bag of money. And do you have a theory on that, David?
They're less they're less costly.
Less costly.
You can buy a $80,000 condo and...
Well, we should dig into that because I think there are a lot of $200,000 and $250,000 condos that go for cash too, because these are older people downsizing, selling their 4-bedroom, 3-bath suburban home for $450,000.
If any of those people would not like to bury all that money in their new condo.
Well, we talk about that all the time.
Okay.
On the flip side, only 17% of single-family homes were for cash. So when you put the two together, and this is important, we got a lot of mortgage people, competitors that listen to our show. That means that 20% of the overall single-family and condo combined market in September, 20% or 1 out of 5 were cash. So that means our pond that we're all fighting over and competing for.
And you're only talking about 80% of the
80%.
80% of the listings anyway. If 20% are for sale by owner.
Let's assume it's the same thing with the for sale by owner.
Okay.
That 80% of those people get mortgages too. All right. When we come back, I've got a quick little rundown of the fastest selling municipalities in southeastern Wisconsin. We'll get to that when we come back.
And if you're on the line, hold on. 414-799-1620 if you'd like to weigh in on the Accunet Mortgage Talk and Text line. You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
There's Wayne and Larry on your radio and the Packers game on your TV, but your phone now gives you a new view with our Packers second screen. It's pretty cool. Get instant reaction to every big moment and exclusive comments from Coach McCarthy on our second screen every game day in the Packers section of WTMJ.com. Brian Wickert and David Wickert here on the Accunet Mortgage and Realty Show.
So in terms of how fast homes are selling, I always like to look at that. We call that the velocity of the market. So, how many days does it take before you get an accepted offer once you plant the sign in the yard? And for the overall Milwaukee metropolitan area, and this is for everybody, the average is 1.2 months. So what would that be? 37 days.
Okay.
Not bad. Okay. And counting down the top 10, you've got West Bend. It's taken 1.4. Wauwatosa, 1.3 months. Then you've got Mount Pleasant, Eagle, St. Francis, Muskego. I feel like I'm doing the weather report. Menominee Falls and Greenfield are all at 1.2 months. And then you got Franklin is at less than a month. Those homes are selling in 26 days.
Wow. From
the day, and that's on 17 sales in Franklin. New Berlin, it's taken just 23 days on 42 home sales. 23 days from the date, so just a little over 3 weeks before. So not every home is selling in one day. It seems like that. We hear a lot of those stories, multiple offers, people fighting over homes. But that's not in every case. All right, so still a strong market, but getting better. And what better time? It's still competitive. You really want to be the best version of yourself, like David says, and get yourself a rock-solid, guaranteed pre-approval, because what's the difference between ours and the flimsy pre-approvals that other banks give out?
When you get the rock-solid, you put your adult pants on, and we documented your income and the down payment that you're going to make. And I guess the way I describe it to folks on the phone is you could go to a website and tell the machine that you are the quarterback of the Packers and you make $1 million a year.
Yeah.
And there's nothing to prove you wrong other than the fact that you're not on TV on Sunday afternoons.
Yes. Maybe you're the backup quarterback.
Well, right, the backup to the backup. But it's just, when you put yourself in the shoes of the seller, you want the person who's writing an offer on your house to demonstrate, hi, I've done my homework.
And I'm the real deal.
And I am the real deal.
Yeah.
I didn't just go to a website, pump in my social, and tell them that I make this and I got $1 million in the bank, maybe.
Right, because they didn't verify it. So, Eric, we've been doing this rock-solid guaranteed thing for 2 years now, and the good news is, especially in southeastern Wisconsin, where we do most of our purchase business, realtors are really recognizing that. I had a nice email last week from a real estate agent who's calling us the gold standard of pre-approval letters. And so, in other words, it's having the effect that it's designed to have, which is to inspire confidence in the seller, that, hey, I can trust that, even though these people might be only putting 5 or 10% down, they're going to be able to do the transaction. Why? Because Accunet is guaranteeing it. Okay. The other thing before we get to the news break that I wanted to mention to everybody, if you go to our homepage today at Accunet.com, instead of the spot where you usually see the Rock Solid Guarantee emblem, you're going to see a Milwaukee Habitat for Humanity logo. And that's because Accunet is trying really hard to inspire everybody we know, including competitors, every real estate agent that listens to this show, to get behind the Milwaukee Habitat juggernaut of building homes for hardworking, low-income folks, and they're focusing for the past several years on Washington Park. So Accunet did our first full home sponsorship earlier this year.
You swung a hammer for a week.
I did, and my elbow still hasn't recovered. But coming up this Thursday is their annual fundraising event. So I thought, you know what, we got to get the mortgage people involved in this more. We got to get the real estate people involved in this more. And so we put out a challenge to all those folks that Accunet will match dollar for dollar. And now we're putting this out to all of our WTMJ listeners as well. We will match dollar for dollar anything you choose to give to Milwaukee Habitat between now and Thursday. And so the $75,000 is what it costs to sponsor a house. We're out to raise $150,000. So that if we can get all these other people that we know to chip in $75,000, we're at $43,000 already. So any gift is welcome. No gift is too small. And I know there are a lot of worthy charities out there, but Milwaukee Habitat is really a terrific one because it really solidifies that Washington Park neighborhood. They've done 215 home builds or remodels in that area. Crime is down, values are up. It's a terrific program. All you got to do is click on the Habitat logo, and you can donate. We'll match dollar for dollar up to $75,000. And when we're successful, which we're confident we will be by Thursday, we will have put 2 more worthy, hardworking Milwaukee families into homes. All right, when we come back after the news break, I do have a story about a 60-year-old woman who has no W-2 income that we are going to help buy a home in 3 weeks. We'll have that story after the news.
If you have a question or comment, you can always call or text on the Accunet Mortgage Talk and Text line 414-799-1620. This is the Accunet Mortgage and Realty Show on 620 WTMJ. Belinda Babinik is in the WTMJ Breaking News Center. Hi, Belinda.
Hi, Eric.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Welcome back on a beautiful Sunday morning, the Accunet Mortgage and Realty Show. I'm Eric Bilstead, along with Accunet Mortgage and Accunet Realty Advisors owner, Brian Wickert, and the Chief Millennial Loan Consultant, David Wickert. Brian, you were talking about Habitat for Humanity before the break, and you said, a well-deserving family that gets to enjoy this home that you guys build. How does that work? How does a family obtain a Habitat for Humanity home? Is it free? How does that go about?
That's a really good question. They have to apply, and they have to be currently spending 50% or more of their income on housing. And believe it or not, that happens a lot in many urban areas, including Milwaukee. And so that's one criteria. The other criteria is they have to have a job because the homes are not free. And I think this is one of the most common misconceptions about Habitat for Humanity is that people are given homes. That is the furthest thing from the truth. They have to, put in 300 hours of sweat equity. How many weeks is that,
That's
David?
the equivalent of like 12 weeks of a full-time job.
12 weeks of a full-time job. Working on either their house or another person's house. That's for a single person. If it's a couple, how many weeks is it, David?
It's 7.5 weeks if it's 300 hours, but if it's 500,
that's 2 months.
No, but if it's 500 hours, that's 3 months.
That's 3 months, right? Okay. So they put in a lot of volunteer labor. They also go through credit counseling. So if they don't have the best credit, they get that all cleaned up ahead of time. Because the whole idea is to put low and moderate income families, and they are mostly lower income. You know, like 60% of the area median income is very typical, but never more than 80%. They have to pay back a mortgage, typically at about $95,000 or $100,000. Now, the rate on the mortgage is a little lower than what Accunet can offer.
It's a Swiss rate.
It's the Swiss. It's the 0% mortgage. But those people have to pay the taxes on the place. They got to pay for insurance. So it ain't free. They got to pay back the mortgage. They also go through home ownership counseling. So it is terrific. Habitat has done 215 bills or rehabs in Washington Park over the last 4 years. Crime is down 48% on the blocks where they have, done a lot of the homes there. And also, it's just unbelievably important for scholastic achievement. They've done surveys or research that kids who live in a Habitat home, their achievement level in school is now up to the state average, which is way, way better than the city of Milwaukee average. So lots of good things happening. If you want to chip in, just go to Accunet.com, click on the Habitat, and we will match your donation dollar for dollar. All right, so now to the story on the 60-year-old woman who is selling her house on October 27th and called me Monday at the behest of her real estate agent who knows about Accunet Mortgage and said, hey, I want to buy another house on the same day. So it's like, we got to get going. And here was the stumbling block.
Does she have a house under contract?
Well, she does now, but she didn't on Monday.
Okay.
She got the house under contract yesterday.
Okay.
And so we started the pre-approval process on Monday. But here was the stumbling block. She is a W-2 employee, but she's like a contract employee where she goes on a job for 3 or 6 months with consulting company A, and she happens to do consulting work on a software program. And then the next 6 months, she might be working for somewhere else. And by the way, her income from last year compared to this year is way, way, way lower. So in other words, I can't use any of her W-2 income to qualify. We are going to tell you how we solve the puzzle, and we are going to make it. We are going to lend this woman $168,000, if my memory serves me correctly, 3 weeks from now. We got the job done. We'll tell you how after this break.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Marquette women's basketball coach Carolyn Keeger has the Golden Eagles on the brink of being nationally ranked. Should be a fun year for them. Ahead of the 2017-2018 season, Keeger shares some of her team's secrets to success with our own Doug Russell. Hear the full chat coming up at 11 o'clock. It's this week's edition of WTMJ Conversations. This is the Accunet Mortgage and Realty Show. Brian Wickert and David Wickert join me. I'm Eric Bilstead. Brian, you were talking about this 60-year-old single woman with no usable W-2 income, helping her buy a home. How does that work exactly? It was my impression under Dodd-Frank that every home buyer had to prove that they have steady income so we don't go back to what happened back in 2008, that whole mess.
You are absolutely correct. And so I'm going to turn it over to Chief Millennial Loan Consultant David Wickert to explain, you like that? To explain how we do this.
Okay, so I'm diagnosing as you go along here. My follow-up question is, does she have any retirement assets?
She has a very significant pile of money in a IRA.
Cool. So I know for a fact we have a specific program, asset depletion.
Oh, wow.
Is the fancy term for it, where we can turn that. So you have two plans. One, you're going to have her. Is she over 59 and a half?
I said, weren't you listening, David?
Sorry,
you're part of the show.
Right,
she's 60.
I'm sorry.
I said she's 60.
So she's over the retirement age where there's no penalty.
Right. Okay.
So Ms. Borrower can set up withdrawals from that IRA. We're going to get a letter from her financial advisor saying Susie Smith is now taking, $5,000 a month.
Yep.
And it's going to drop into her, U.S. bank account.
That's right.
And we can point to that income and be like, look, Mr. Underwriter, she has the means to take withdrawals out of that IRA.
For how long?
3 years.
That's right. So that's the test. So Eric, you hit the nail on the head. Dodd-Frank says the lender has to document that the borrower has a likelihood of 3 years of stable income. So again, the magic is take the borrower's pile of IRA money, or it can be a 401k, and make sure that at the monthly rate that we need to take out money, it's going to last for at least 3 years. But now here comes the best part. After we close on the purchase of the home, the borrower does not have to keep taking those withdrawals. Okay? We just have to set them up and have one, or depending on the loan program, like we had a VA loan where we needed to do this, then in that case we had to take out two monthly withdrawals in order for it to count as qualifying income. And again, Eric, the reason is that when you take money out of an IRA, it is income. So all we're doing is saying, hey, this person now has $4,000 a month or $5,000 or whatever the dollar amount is of qualifying income, and that's how we get her into a 30-year fixed rate.
I see.
Now, what David alluded to is a different program.
I had two solutions.
Yes, David does
at the same time,
even though he wasn't listening to the woman's age. So let's say that this woman was instead 55 years old. Now, what could we do, David?
We could do that asset depletion program where we get to point to your pile of money and turn that into a synthetic income stream. It has to last for 5 years.
That's right. So a little higher standard on this bank portfolio program.
Correct.
So this one is an adjustable rate mortgage.
Correct.
98% of people want a fixed rate, but when you're in the situation,
it does the trick.
Yeah, because you don't have the option of going on a Fannie Mae 30 or fixed. So on this deal, if you had, $600,000 of retirement income, or no, a pile of retirement assets, we do have to give it a little bit of a haircut.
30% haircut at your retirement age.
Yeah. Then and here's the part about that really cool program is we don't actually have to take the money out.
We just got to point to it.
We just have to point to it and do the calculation.
You know what I think this is helpful in the realm of for folks who are retired or who are about to become retired. We do this IRA distribution plan sometimes to supplement people's documented income. It's like
Social Security.
Right, I'm getting a pension and Social Security. If you take out RMDs, we
required minimum distributions out of your IRA.
Sorry, yeah, you can't point to that as income, but we can use this distribution, setting that up to supplement the other income that you're getting, because the money's there. You just have to point that it's coming on a monthly basis to fit in the box in mortgage land.
All right, so great question, Eric. And, if there's any takeaway, it's that we're clever fellows at Accunet Mortgage, and we kind of know all the angles. So don't let your retirement scare you into thinking, I can't take out a mortgage, whether it's to buy a second home or refinance and do something you want to do, maybe buy a new primary residence like this lady wants to do. All right, when we come back, I have got a fun survey on the motivation as to why millennials are buying their first home when we come back.
And if you'd like to weigh in, you have a question for the boys, you can do so, 414-799-1620 on the Accunet Mortgage Talk and Text line. You are listening to the Accunet Mortgage and Realty Show on 620 WTMJ.
Don't just find a house, find your home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Welcome back. Good morning to the Accunet Mortgage and Realty Show. Eric Bilstead along with the owner, Brian Wickert, and the Chief Millennial Loan Consultant, David Wickert. Gentlemen.
Yeah, so I probably shouldn't repeat the survey because it's not scientific, but I can't resist. So this was a survey done at the behest of SunTrust Mortgage, which is a major mortgage lender, mostly in the southeast part of the United States. And they hired Harris Polling Company to conduct a poll of 412 U.S. adults age 18 to 36 online, among whom 248 had bought their first home, and 135 had never bought a home. And they asked him, what were your motivations? All right, so ready, Eric, to play the how can I trick you into giving the wrong answer game?
Yes.
All right, so which one of these three motivations ranked the highest? Was it birth of a child, marriage, or a better space for my dog?
I'm going to say birth of a child.
I'm going to do the dog one.
You are correct. Millennial David, he's cheating. He's a millennial. He knew the answer. 33% of the respondents said better space or yard for my dog.
You know?
Marriage was only 25% and birth of a child 19%.
Wow, okay.
Yeah.
All right, but above the space for the pet, barely. And we were talking about this last week a little bit. Building equity. Tired of renting. That's what that means. I was tired of renting, and I want to, have my monthly housing expense go towards something. Mm-hmm. That's the way I interpret that. Okay. That was 36% of respondents. And the number one answer, more living space. That was 66%. Tired of this cramped apartment living thing. I want more space. Okay. So there you have it. Unscientific survey puts more space for my dog. Ahead of
Sounds
marriage.
like a country song.
More space for my dog. All right, David, bring us up to speed. What's happening with mortgage rates? They are creeping up a little bit.
Yeah, so with the jobs report on Friday, oddly enough, the economy shed jobs, but rates went up because everyone looked past the hurricanes.
That's right.
There was still underlying strength.
That was the given reason why the number of people employed in the United States shrank last month was because of the hurricanes. The unemployment rate
went down,
which is a different measuring survey, went down to a really low number, 4.2, and earnings went up, which means there could be a threat of inflation. And inflation is the enemy of interest rates, so that's why mortgage rates are up a little bit.
So if anyone is like me and they only function on deadlines, your deadline is December 13th because the Fed is going to raise, there's an 89% odds that the Fed is going to raise rates on December 13th. So at the end of business on Friday, Accunet could offer with 25% equity and all the other right stuff, including a credit score of at least 740 and escrowing for your taxes.
Yep.
An interest rate of 3.99% with $600 in closing costs. APR's
600 total?
600 total. APR's 4.02.
Okay. Now, I want to just beg to differ with my millennial son.
Yeah.
The deadline ain't December 13th.
Whoa.
Because the rates are going up right now in anticipation. So the deadline was last Wednesday.
Yeah.
It was last Wednesday.
That's fine.
Or I'm just going to go out there and say the sooner the better.
Yes.
Right? So what about a 15-year, David?
15-year, if you're maybe, approaching retirement, you say, honey, I don't want to have a housing payment when we retire. We could do that 15-year at 3.375% with $600 in closing costs. The APR is 3.42.
What are some of the frontline motivations you're seeing, David, from you and your team members? What's motivating people to refinance right now? Is it payment savings? Is it?
Yeah, you know what's mostly it's people who are staying in place rather than go buy their next home. They're saying, honey, let's do a cash out refinance, put $30,000 into our kitchen, and then we're kind of living in the house that we want to be living in without having to move.
Okay.
So the cash out refinance is a big one. The other one is combining a first and a second mortgage together because, as you've said on radio spots, hey, that's been going up and up and up and up.
The home equity line of credit portion, which is widely, advertised by the bank, says this is the perfect tool for remodeling.
With those teaser rates, too.
Yeah. I saw one on Billboard, 1.99%, but that ain't forever. It's eventually going to revert to something tied to prime. Yeah. Currently, the prime rate is 4.25%, and is soon to go to 4.5%. So depending on what your first mortgage rate is, we can do the math for you and help you figure out, maybe now is the time to combine that existing first mortgage with that adjustable rate home equity line balance into one nice fixed rate loan before the home equity portion goes up again. And we were lulled into sleep. For 8 years, the prime rate never changed. It was at 3.25%. It has already risen from 3.25% to 4.25% and going higher as the economy improves. And another thing with a higher, I don't know how much of this you're seeing on the front lines, David, but with the raising home values, that opens the door. If somebody bought their home 3 or 4 years ago and is paying monthly PMI or FHA, monthly mortgage insurance, you can refinance at the same rate and still save, that monthly PMI cost,
Yeah.
which that's a layup. So if anybody out there, son, daughter, is still paying monthly PMI or monthly FHA mortgage insurance, click on the blue button hard and let us figure out if there's a way to save you money. Your rate does not have to go down 1% to make a refi worthwhile. That is a old rule of thumb. Hey, meanwhile, home inventories are improving, as we discussed earlier in the show. So this fall ain't a bad time to get out there and get yourself a house. And all you got to do to get started on our one-of-a-kind, rock-solid, guaranteed pre-approval to buy is click on the blue button at Accunet.com. That's ACCUNET.com. Thanks, Eric, for being our co-host
Absolutely.
today. We have next week off, so we'll be back in a couple of weeks.
Brian Wickert and David Wickert, thank you, gentlemen. This is the Accunet Mortgage and Realty Show on 620 WTMJ. WTMJ Conversations is next.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors and not WTMJ Radio or Scripps Media Incorporated.